banking as a whole has earned at rates that are well beyond on tangible equity, well beyond, I think, what much more glamorous businesses have earned in recent years.
The one thing that made Chairman Powell's job a little easier this time than it was in 2008-9 is that the banks are in far better shape. So in terms of thinking about what was good for the economy, he wasn't at the same time worrying about what he was going to do with Bank A or Bank B to merge them with somebody else or put added strains on the system or anything. I mean, the banks were very involved with the problem in 2008 and 9. They had done some things they shouldn't have done in some of them, and they were certainly in far different financial condition now. So that the banking system is not the problem in this particular show. I mean, the government we decided as a people to shut down part of the economy in a big way. And it was not the fault of anyone that it happened. Things do happen in this world. Earthquakes happen, huge hurricanes happen. This was something different. But the banks need regulation. I mean, they benefit from the FDIC, but part of having the government standing behind your deposits is to behave well, and I think that the banks have behaved very well, and I think they're in very good shape. That's why the FDIC has built up $100 billion that I've talked about. I mean, they've assessed the banks in recent years at accelerated amounts in certain periods, and they even differentiated against the big banks. So they built up great reserves there, and they've built their own balance sheets, and they are not presently part of Chairman Powell's problem, whereas they were very much part of Chairman Bernanke's problem back in 2008 and 9. How you spot the people that are doing the dumb things is not easy because, well, sometimes it's easy, but I don't see a lot that bothers me. But banks are, in the end, institutions that operate with significant amounts of other people's money, and if problems become severe enough in an economy, even strong banks can be under a lot of stress, and we'll be very glad we've got the Federal Reserve System standing behind them. I don't see special problems in the banking industry now. I could think of possibilities, and Jamie Dimon referred to this a little bit in the JP Morgan report. You can dream of scenarios that puts a lot of strain on banks, and they're not totally impossible, and that's why we have a Fed. And I think overall the banking system is not going to be the problem. I wouldn't say that with 100% certainty, because there are certain possibilities that exist in this world where banks could have problems. They're going to have problems with energy loans. They're going to have problems. They're going to have extra problems with consumer credit. They're going to have, they're in, but they know it, and they're well reserved. Well, they're well capitalized for it. They were reserve building in the first quarter, and they may need to build more reserves. But they are not a primary worry of mine at all. We own a lot of banks, or we own a lot of bank stocks.